वेलकम टू बी लर्न में आपका स्वागत है। इनकम टैक्स टॉपिक इनकम फ्रॉम बिजनेस एंड प्रोफेशन सेशन नंबर 4 टॉपिक कवर्ड इन दिस सेशन basis of charge, expenses expressly allowed, expenses not deductible, specific disallowances, depreciation, meaning of actual cost, etc. And now basis of charge under section 28. The following income is chargeable to tax under the head profits and gain of business or profession. Profit and gain of any business or profession. Number 2, any compensation or other payments due to or received by any person specified in section 28 subsection 2nd. Income derived by a trade, professional or similar association from specific services performed for its members. The value of any benefits or perquisite, whether convertible into money or not, arising from business or the exercise of a profession. Any profit on transfer of the duty entitlement passbook scheme, any profit on the transfer of the duty free replenishment certificates, export incentive available to exporters, any interest, salary, bonus, commission or remuneration received by a partner from firm, any sum received for not carrying out any activity in relation to any business or not to share any know-how, patent, copyrights, trademark, etc. Any sum received under a key man insurance policy including bonus, profits and gains of managing agencies and income from speculative transactions. Note, income from the aforesaid activities is computed in accordance with the provisions laid down in section 29 to 44D. Expense expressly allowed, rent rates, taxes, repairs and insurance for building under section 30 are allowed. Then repairs and insurance of machinery, plant and furniture under section 31. Then depreciation allowed under section 32. Then tea, coffee, rubber development account under section 33 AB. Expenditure on acquisition of patent rights and copyrights under section 35A. Insurance premium under section 36(1) subsection 1. Premier for insurance on health of employees section 36(1) subsection 1B. Then bonus or commission to employees section 36(1) subsection 2nd. Then interest on borrowed capital section 36(1) subsection 3rd. Employees contribution to recognized provident fund and approved superannuation fund under section 36(1) subsection 4. Contribution toward approved gratuity fund section 36(1) subsection 5th. Employees contribution toward staff welfare schemes. Bad debts section 36(1) subsection 7. And family planning expenditure under section 36(1) subsection 9. Banking cash transaction tax, securities transaction tax and commodities transaction tax. Advertisement expense section 37 subsection 2B. General deduction under section 37 subsection 1. Expense not deductible section 37 1. Damages and penalty paid for transgressing the terms of agreement with the states. Penalty and damages paid in connection with infringement of law. Litigations expenditure incurred for curing any defect in the title of assets or completing that titles. Litigations expenses for registrations of shares. Fees paid for increase of authorized capital. Expenditure on raising equity shares capital and preference share capital. However, expenditure on issue of bonus share is deductible. Then amount paid for acquiring technical know-how which is to be utilized for the purpose of manufacturing any new article, and such know-how is to become the property of the assessee at the end of the stipulated period of time. Amount expended for acquiring a business or a right of permanent character or an asset which generates income, or for avoiding compensation in business. Payment made for acquisition of goodwill. Expenditure incurred for acquiring rights over or in land to minerals. Fees paid to obtain a license to investigate and search minerals. Payment made in considerations of acquiring a monopoly right to manufacturer or producer. Royalty payable on the basis of goods produced under the same arrangement is however deductible. Tax paid by the assessee who is defaulter by not deducting tax at source under section 195 on behalf of non-residents. Compensation paid to contracting party with the object of avoiding an unnecessary investment in capital assets. Expenditure on shifting of registered offices. Insurance premium paid by a firm on life insurance policies of its partner. Amount paid by liquor contractor to police staff and other officers to enable it to make unauthorized purchases and sales of liquor. Amount paid by a company to the registrar of companies as filing fee for enhancement of capital base of the company. Payment made by assessee company which was partner in a firm to outgoing partners of firm on account of their agreeing to restrain from carrying on similar business for a period of 15 years. Specific disallowance. Interest, royalty, fees for technical services payable outside India if on such amount tax is deductible but tax has not been deducted or deposited with government, section 40A subsection 1st. Fringe benefit tax, section 40A IC or first C. Salary payable outside India without tax deduction, section 40A subsection 3rd. Provident fund payment without tax deduction at source, section 40A subsection 4. Certain specified expense in case of partnership firm. Interest paid by an association of person or body of individual to its members is not allowed as deduction by virtue of section 40BA. Payment to relatives in excess of fair value not deductible, section 40A subsection 2. Expenditure in excess of rupees 20,000 in aggregate in a day paid otherwise than by account payee check drawn on a bank or account payee bank draft not allowable, section 40A subsection 3. Amount not deductible in respect of certain unpaid liabilities, section 43B. And now books of accounts to be maintained, section 44AA. The persons carrying on specified professions are required to maintain specified books of accounts only if the gross receipt of their profession have exceeded rupees 1,50,000. Every other person carrying on business or profession shall keep and maintain such book of accounts and other documents as may enable the assessing officers to compute his total income in accordance with the provisions of this act. And now, if his income from business or profession exceeds rupees 1,20,000, number 2, total sales turnover or gross receipt thereof exceeds rupees 10 lakh, the assessee has claimed his income lower than deemed profit. And now tax audit under section 44AB. A person carrying on business, then total sales turnover or gross receipt exceeds rupees 40 lakhs, then profession, then gross receipt exceeds rupees 10 lakh, then business covered under section 44AB, 44AE, 44AF, 4BB, and 44 triple B. He has claimed his income to be lower than the profits or gain so deemed under the respective section. The assessee is required to get his accounts of such previous years audited by a chartered accountant before 30th September of the assessment year. Now, special provision for computing income on estimated basis 44 AD, 44 AE and 44 AF. Notwithstanding anything contained in section 28 to 43 CE, the following provisions will apply. Business of assessee, section 44 AD, civil construction or supply of labor for it. Then section 44 AE, paying, hiring or leasing goods carries owned by him. Section 44 AF, retail trade in any goods or merchandise. This section applies if gross receipt of such business during the previous year do not exceed rupees 40 lakhs. Then section 44 AE, goods carriage owned by assessee at any time during previous year doesn't exceed rupees 10 lakhs. Then section 44 AF is apply only on total business turnover in that previous years doesn't exceed rupees 40 lakhs. Then deemed profit under section 44 AD, 8% of gross receipt. Section 44 AE, number of heavy goods vehicles multiply rupees 3500 multiply NM plus number of other vehicles multiply rupees 3150 into NM, or NM means number of months. Then section 44 AF, 5% of gross receipt or such higher sum as declared by him in his return of income. And now depreciation under section 32. Depreciation allowance, section 32, depreciation shall be determined according to the provisions of section 32. Condition for claiming depreciation. In order to avail depreciation, one should satisfy the following condition. Number 1, assets must be owed by the assessee. Number 2, it must be used for purpose of business or profession. Number 3, it should be used during the relevant previous year. Now, block of assets, section 2, subsection 11. The term block of assets means a group of assets falling within a class of assets comprising tangible assets being buildings, machinery, plant or furnitures, intangible assets being know-how, patent, copyrights, trademarks, licenses, franchises or any other business or commercial rights of similar nature, in respect of which the same percentage of depreciation is prescribed. Then written down value method, section 43 subsection 6, written down value for the assessment year 2009-10 will be determined as under. Step 1, find out the depreciated value of the block on the April 1st 2008. Then step 2, to this value add actual cost of the assets falling in the block acquired during the previous year 2008-9. And step 3, from the resultant figure deduct money received or receivable together with scrap value in respect of that assets falling within the block of assets which is sold, discarded, demolished or destroyed during the previous year 2008-9. Then meaning of actual cost, section 43(1). It means the actual cost to the assessee as reduced by the proportions of the cost thereof, if any, as has been met directly or indirectly by any other person or authority. If written down value of the block of assets is reduced to 0, though the block is not empty, no depreciation is admissible. If the block of assets is empty or ceases to exist on the last day of the previous year, though the written down value is not 0, no depreciation is admissible. Additional depreciation at the rate of 20% is available on new plant or machinery acquired or installed after 31st 3/2005. If used in production or manufacturing, if assets is used for less than 180 days during the previous year in which it's purchased, then depreciation and additional depreciation is restricted to 50% of actual depreciation or rate of depreciation. However, in subsequent year, full depreciation is allowed irrespective of use. When a depreciable assets of a power generating units is disposed in a previous year, then terminal depreciation or loss is deductible or balancing charges or gain is taxable. And our partnership, deductibility of interest paid to partners by firm depend upon the following. Number 1, payment of interest should be authorized by the partnership deed. Number 2, payment of interest should pertain to the period after the partnership deed. And number 3, rate of interest should not exceed 12%. Deduction of remuneration to pay partners can be claimed if paid to a working partner and according to the partnership deed. The maximum amount of salary paid to all the partners during the previous year should not exceed the limits given below. In case of the firm carrying of a profession referred to in section 44AA, on the first rupees 1 lakh of the book profit, or in case of the loss, rupees 50,000, or at the rate of 90% of the book profit, whichever is more. On the next rupees 1 lakh of the book profits at the rate of 60%, and on the balance of the book profit at the rate of 40%. In case of any other firm, on the firm first rupees 75,000 of the book profit, or in case of loss, rupees 50,000, or at the rate of 90% of the book profit, whichever is more. Then on the next rupees 75,000 of book profit at the rate of 60%, and on the balance of the book profit at the rate of 40%. And now MAT, applicability of minimum alternative tax MAT under section 115JB. Minimum alternative tax section 115JB MAT is applicable in case of companies only. If tax liability of a company under normal provisions is lower than 10% of book profit, in such case, book profit shall be deemed as total income and 10% of book profit should be deemed as tax liability. Up to assessment year 2001 to 2, these provisions were covered by section 115JA. A company is allowed credit of tax paid under section 115JB for the assessment year 2006-7 and onward in accordance with the provisions of section 115JAA. MAT credit can be carried forward for a period of 7 years. And now do it yourself. Question number 1, what do you mean by minimum alternative tax? And question number 2, explain the provisions of tax of income from business and profession. And that's it from session number 4. Thank you.